Hey, welcome back to Invest Like. Let me ask you, how often do you find yourself scrolling through your phone, checking your stocks or crypto, wondering what the next move should be? Maybe you have read a dozen different takes on whether to sell, buy, or hold, but the truth is, the more noise you follow, the harder it is to think clearly. If you have been feeling overwhelmed by conflicting advice, today's video is for you. We are diving into the mind of Charlie Munger, the brilliant partner of Warren Buffett and one of the sharpest investors of our time. Munger doesn't get caught up in daily market hype or quick wins. Instead, he focuses on the big picture, using deep thinking and iron discipline to guide his investments. Today, we are going to break down Munger's top 3 rules that could change the way you think about investing and help you avoid the mistakes most people make. Rule 1. Long-term thinking is your superpower. Let's start with something most investors know, but few actually practice: long-term thinking. Munger once said, "The first rule of compounding is to never interrupt it unnecessarily." If you have been checking your portfolio obsessively, reacting to every market dip and rise, then you are missing the point. Munger doesn't care about short-term market noise because he understands the power of patience and compound growth. Here's the problem. Most of us get trapped by the desire for quick wins. We feel compelled to sell when a stock drops a few points or rush into the next big thing when we see a surge in the market. But for Munger, the short-term thinking is dangerous. His strategy revolves around the idea that great businesses, given enough time, will deliver massive returns, but they need enough time. Practical tip: next time you are about to make a trade, pause and ask yourself, will this decision matter in 10 years? If the answer is no, you're probably thinking too short-term. Instead, focus on finding investments that you believe in for the long run and allow compounding to work its magic. Remember, compounding is your greatest ally, but it only works if you give it time. Rule 2. Invert your thinking. Solve problems by avoiding mistakes. Charlie Munger loves to invert problems. One of his famous phrases is, "All I want to know is where I'm going to die, so I will never go there." It might sound funny, but what Munger is really saying is that we can learn more by thinking about how to avoid mistakes than by trying to chase success directly. Here's the challenge for most investors. We are always looking for the next big win, the stock that's going to triple in value, or the strategy that's going to make us rich. But Munger approaches investing from a different angle. Instead of asking, "How can I win?" he asks, "How can I avoid losing?" By focusing on not making catastrophic mistakes, he reduces risk and increases his chances of long-term success. Think about it this way: avoiding a major loss can often be more important than getting a huge gain. If you avoid the common traps, like emotional trading, following trends without understanding them, or not doing your homework, you will already be ahead of most investors. Practical tip: before making any investment, take a moment to flip the problem on its head. Instead of asking, "How can I make money on this?" ask, "What could go wrong?" And this inversion technique helps you spot risks and avoid potential losses. By focusing on avoiding mistakes, you will improve your chances of success over time. Rule 3. Understanding human behavior is key to investing. One of Charlie Munger's secret weapons in investing is his deep understanding of human psychology. He once said, "If you don't know who you are, the stock market is an expensive place to find out." What Munger means is that understanding your own emotions and biases is critical in making smart investment decisions. Most investors are driven by emotion, whether it's greed, fear, or FOMO. The stock market has a way of manipulating our emotions, making us want to buy when prices are high and sell when prices are low. Munger, however, stays calm and rational. He knows that emotional decisions almost always lead to bad outcomes. You have probably experienced this yourself. How often have you made a snap decision because you were afraid of missing out on a trend, only to regret it later? Munger's advice is to slow down, detach from the noise, and make decisions based on logic and reason, not feeling. If you can master your emotions, you will have a huge edge over the average investor. Practical tip: the next time you feel an emotional urge to make a trade, whether it's out of excitement or fear, step back. Ask yourself, am I making this decision based on facts, or is it purely emotional? By recognizing when your emotions are at play, you can make more rational decisions and avoid the traps that most investors fall into. Conclusion: Charlie Munger's approach to investing is unique but incredibly powerful. Let's quickly recap the 3 key rules we've learned today. Think long term. Don't get caught up in the daily noise. Focus on finding investments you can hold for decades and let compounding do the work. Invert your thinking. Focus on avoiding mistakes rather than chasing success. The fewer big mistakes you make, the more successful you'll be in the long run. Understand human psychology. Learn to control your emotions, and you'll make better, more rational investment decisions. As you go about your day, whether you're checking your portfolio or just thinking about your next financial move, remember these rules from Charlie Munger. They are not just for investing. They can help you navigate life with more clarity and less stress.